Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Wednesday. And we're at the 26th of September. It's about 5:10 p.m. I'm late because I'm sitting here watching the president, who's got a news conference that's running over an hour, and he's taking any and every question. It is something to behold. As you'll see, if I come back to the quote page, they're not there. This is just where the settlements were, and that's because I'm after 4:45 p.m. Nearly at 5:15. But as you can see, the market on a weekly chart went from 886 down to 811.5. We've had a bounce. For the week, we're up 2 3/4. Pretty neutral for the week so far. Not an awful lot going one way or the other. And this market is caught in this sideways pattern right now. Could it break out of here? Well, that'll be the interesting part. With today's action, so far at least, you have a pattern of higher lows and higher highs. That's bullish. I haven't said that in a very long time. You'd have to take out the 837 level to take that away from the market. The break today, actually it was yesterday, you held the 18-day average, and today you had what's called an inside day. You didn't take out yesterday's highs or lows. What you don't want to take out is that 837. If you hit that number, you could end up with lower highs, lower lows, right back into the downtrend. Here's why I'm talking the sideways action. I want you to look at the Bollinger Bands. Do you see how the market's stuck in them? Just spinning back and forth. If you go to your gold chart, you're going to see gold and soybeans right here have the same exact pattern. So you get up, you run out of momentum at the upper Bollinger Bands. Remember that Bollinger Bands are an algorithm designed to have the market trade within them 95% of the time. However, in order to get out of the sideways action that you had there, or when you get it here, inevitably you're going to get outside of those bands. That's that 5%. Sometimes you, like here, ride the bands to lower prices. But it often starts from that sideways action. And I get excited when I see that, because I realize then the trick is trying to catch the market and not getting caught in the false breakout to the downside or to the upside. When I look at momentum, momentum as you approach an upper Bollinger Band and sideways action often gets overbought. It's from there you have the trick of trying to figure out, is it going to stay overbought and pop through? What I teach, and I'll stay with that, is the challenges after you hit an 18-day average and you hit the upper Bollinger Band is the odds strongly favor the market's going to run out of momentum, so I'm not changing my opinion. In the meal market, you have a pattern of higher lows, higher highs, flat momentum that's trying its darn best to pick up, hasn't done a very good job yet. And as you look right here, you can see the market just hanging at the 18-day average of closes. Nothing there to do. Soybean oil's been stronger as a chart than the beans or the meal, and it's got this pattern of higher lows, higher highs over the 18-day average, admittedly overbought. I'd like to see it get up towards that 2909 level, that the upper Bollinger Band, and maybe see if it runs out of momentum there. I will tell you something that surprised me, is the lack of real big downside in this market. Here's this sideways action you'll have me talk about so often. And as you can see, the market did break out to the downside. Remember what I said, on the other side it was overbought. Well, here you're oversold. And it stays like that. That's not uncommon, my friends. But if you really look at where the market was, let's say it was in the 2850 area, it did get a break into the 2700 zone. It didn't last very long. And since then, the market's been trying to work its way higher. In the corn market, I'll call this chart neutral. Lower low, higher high, getting into overbought territory against the upper 18-day average of closes, staying over it. Winter wheat, well, not winter, Chicago wheat. I read that wrong. In the wheat, you got higher lows, higher highs, but you closed under the 18-day average of closes. Be careful here. If this market now takes out yesterday's low, which was 516 and a quarter, you could end up with a pattern of lower highs, lower lows. You'd be under the 18-day average, and you might turn the momentum down. That could set up another challenge coming back into that lower Bollinger Band. Battleground is clearly, and where the market ran out of upside momentum, that 18-day average of closes. In the sugar market, new lows for the move. So we had this big vertical move almost up and straight back down. Crazy chart. 100-day average with the Bollinger Band combination stopped the rally. Now the question is, will the lower Bollinger Band act as support as it has in the past? I would expect to see some short covering here, but not a trend change. In the coffee market, I don't know that you're going to get weak enough to get to that lower Bollinger Band. You're getting a pattern now of lower highs and higher lows. To resume the downtrend, you've got to take out lows of 96, I think it's 96, 96.55. And if that happened, then I'd be looking at that possibility of getting to the lower Bollinger Band, the support on rallies, resistance back up to the 99.93 level. In the cocoa market, oversold, down to the lower Bollinger Band. This short covering rally failed against the 18-day average, what we call that line in the sand, just didn't go anywhere. Cotton, watch out. This market, if it takes out today's lows, could very quickly set up a pattern, if you look at today's high, of a higher high, lower low, but because you've kept the embedded reading, embedded is when these numbers stay under 20, and you can see how they've been doing that. That just says that any rally in the market is still in the sell targets of traders, and that's what I'm expecting. And if it starts propelling itself, it might go to the lower Bollinger Band. Lose the embedded reading, get the red number over 20 on a close, then I might look at the 18-day average. In the cattle market, I'm frankly surprised it rallied this much today. You got up to 118.90. The last rally high in this market was right here at 118.70. You lost the embedded reading, and you did not make a run at this point for the lower 18-day average. Often that's what happens, pricing the 18-day average. It cannot re-embed, or can it? Let's take a look together. Can you fix that for me? There you go. Talking to my tech here. If we take a look right here, you still had the embedded reading on Monday. Both numbers are still over 80. You lose it on Tuesday, you get it back today. It's still embedded. Got what I'm saying? You could only lose it one day. You have to get it back the day after that, or it's embedded again. It did that. Not so in feeder cattle. Feeder cattle are much weaker than the fat. So because you kept the embedded reading in the fat, that play's still live. This one is not. You lost this, back here you lost it the day after, and it's still lost. You can't regain it. It's just an overbought market at this point. I'm still looking for price and the 18-day average to come together. And in the hogs, you've made that run to that 18-day average. Today's low was 56.45, 56.35 is that number, so you're right into the support. You're very overbought, difficult chart to work with. Want to remind you all, having the live webinar tomorrow. It's an invitation only. I sent the invites out, and I'll send them out one more time in the morning. So look in your mailbox. It'll be there first thing in the morning. We're already getting pretty full with all this, so I've got to tell you that it is filling up nicely. Bring your questions. That's what makes it fun. You bring them. I'll try to answer it. It's at 1 p.m. Central Daylight Time on Thursday. Got that? That's the key. Here's the phone number. If you didn't get an invite, you can call my staff. They'll get one out to you. But once it starts, I don't have time to do that. Then we're rocking and rolling. Have a great night.